What's up? What's up? What's up? Happy Monday to you guys. This is Jeremiah Davis, aka the Funding Coach, coming to you live with Monday Fun Day. Um, Today's topic, I'm looking rough, but it's Monday, so it's all good. Today's topic, we got a real doozy of a topic for you guys today, um, and there's a lot of things I want to kind of cover in today's topic, um, but the primary topic is what's trending in 2025 in the business funding world. Okay. Um, I got a number of talking points I got here on my little tablet. So I want to make sure I get all those correct and in order for you guys. But the thing of it is, first of all, most people are not familiar with business funding in general. Okay. And when you're not familiar with business funding, you have a lot of misnomers. You think that you can get approved for, with approved for a business loan or even a personal loan in um, in a way that is the banks don't won't approve you. Okay. And it's kind of critical. You got to know where you're at and where you're going. Um, and to understand, right? Because in traditionally banks haven't changed, right? They want to loan money, they got money to loan, but they're not going to loan it um, if you're a risk of paying it back. Okay, if you're not, and they're going to mitigate their risk as much as possible, and that criteria is just strengthened um, in the last few years. So it's not gotten easier to get funding. It's gotten more difficult to get funding. All right. And this is kind of the tail end from post pandemic. And then, with the economy, inflation, interest rates on the rise. So there's a lot of factors that come into play. But you still can get funding if you know what you're doing. Okay. So what are the trends? What are the trends? Okay. Um, Unlock in 2025 the top business trends and strategies to grow your business this year. Okay, so that's the topic of the day. And the big term I'm going to throw out here is alternative funding. Now, you might think you know what it means, and you might be right, with alternative funding. What is alternative funding? Alternative fund just means non-traditional bank loans. But under that non-traditional or alternative funding umbrella, there is a series of loan types. Okay. So you got stuff like, you know, revenue-based loans, working capital loans, which pretty much are the same thing, right? Merchant cash advance. Those things are pretty similar. Merchant cash advance typically sticks to a daily a payment, where working capital could be a weekly or a monthly payment, or revenue based could be a weekly or monthly payment. Um, but it's not a business term loan. The interest rates are higher, and you might as well just just accept it that you're going to pay higher rates than normal. All right, you're not going to get under single digit rates on any type of money right now unless you're well qualified. Which, quite frankly, most of us are not. Okay, even myself, I don't have everything in order for my business to get a traditional business term loan with single digit rates. Okay, so everybody's in the same boat when it comes to that regard. Now, if you're a seasoned business, 5, 10 years plus in business, doing 100 to $500,000 a month, and I mean, I got clients like that. They got 780 credit, got good business, got good financials, got it all, and still can't get approved for a business term loan because they don't have everything else that they need. They're getting lines of credit, alternative funding, or other types of funding products. And that's what I want to talk about is the other type of funding products. And if you are trying to provide funding for your clients, you need to know, you need to be aware of all the different options that are available to your clients. Just don't slam everybody in. I got people calling me and texting me somehow, the guy wants this type of funding or this type of funding. Well, it doesn't work that way. You don't get to pick the type of funding you want. You get to pick the type of funding that you qualify for. Okay. And there is not like specific funding for certain thing. I mean, let me give it to you like this. I had a guy call me a couple of days ago, and he wants a loan, and this is how he said he wanted a loan for his origination fees on a real estate deal. Well, there is no loan that caters to origination fees. Okay, on a real estate commercial real estate deal, that's not a thing. Okay, either you're applying for a business loan or a personal loan. Okay, if you apply for a business loan, then you have that criteria that has to fall under for a business funding. If you are applying for a personal loan, then you fall under that criteria for personal funding. Okay, now within the business loan criteria, another umbrella, there's a slew of funding products. I mean, I provide probably 23 of them in house. Okay, that we have lenders for everything for credit based, asset based, revenue based, um, real estate, factoring. So there's a lot of different loan products, but you're trying to find what peg that you fit in so you can get the funding that you need. Simple as that. Okay. But some other alternative type of business funding or revenue based or alternative funding, let me use the word alternative, right? I said revenue based, I said merchant cash advance, but crowdfunding is on the rise. Crowdfunding is really good. There's a lot of people out there offering crowdfunding for such things as like startups or tech startups. Okay. So that might be an avenue, right? And I mean, long as you meet the criteria, then you can get that type of funding. Okay, that's what we're talking about. All right, but then you have invoice factoring. Okay, we have accounts receivable. We have inventory. We have um, equipment financing. We have purchase order financing. So, and the benefit of what these alternative funding products are is that um, you get the money fast. Okay, I mean, within a couple of days, you can have money in hand or lines of credit. Now there's a lot of alternative lines of credit. They're like similar MCAs, but you don't pay for it unless you use it. Okay, and you don't have to use it all at one time. You can use it little by little, and you can manage it better, and then build your business or grow your business or provide the things that you need for your business with these type of alternative funding solutions. And what I'm trying to convey here is that having a plethora of funding options for your clients is the best way to move in 2025. Okay, and being able to identify what funding product is best suited for them, and then be able to educate your client on, yeah, we're not going to be able to get you a business term loan because your credit is below 680, you haven't been in business long enough, you don't have enough revenue. Okay, what are SBA? There's a lot of different SBA loans out there now. There's an SBA express loan that you can get that a lot of people would qualify for if they've been in business more than 2 years. They're doing 150,000 a year. They have a 680 or higher credit score. But let me tell you this: for those type of loans, you need to have a small business FICO score. Okay, this is where your business credit comes into play, but it's not all encompassing of business credit. All right, where it comes into play is your small business FICO score is a combination of your business credit file and your personal credit file combined. Okay, this is what the government uses. And now there's over 10,000 US based lenders that use this same model right? A few weeks ago, about a month ago, I had someone denied for that type of for a business term loan because his small business FICO score was below 180. Now, the scale for the small business FICO score goes from 0 to 300. Okay, so here's a one. Their criteria for a business term loan was a 180. The SBA, the government's criteria for the small business FICO score is a 155, 160. Last time I checked, it was 155, might be 160 now, but it's a much lower score. Okay. But yeah, that client got denied. And so I had to go to an alternative funding resource for them, which they didn't want because it was high interest rates. But you don't really you don't get to negotiate. You don't get to tell the bank, no, this is what I want, this is what I want to pay. They're gonna say, have a nice day. Okay. So you need to be able to get or accept what you're going to get. And here's the caveat. I'm not too worried about the interest payments or the interest on a given loan. People get caught up with that because they think they're going to be paying. You're going to pay. Okay. The focus needs to be on what can you do with the money to generate more revenue in your business, right? If I got you $100,000 revenue based loan and it's at 30%. Okay. That's not unusual. That's average. I mean, it could be anywhere from 30% up to 50%, depending on your file. So I have no control over that. I'm not a direct lender. I'm a loan broker. I work with hundreds of banks and always try to find the best deal I can. I try to find a deal that I would accept. If I was in their shoes, would I accept this deal? If I wouldn't accept the deal, I'm not even going to offer it. Say, this is what I got offered to you, you know, because it's not a good deal. And I don't want to push somebody into a bad deal that I wouldn't accept for myself. So I'm just keeping it real. Okay. So these are the types of, so I just want you to start thinking like, okay, majority of the people that we're dealing with on a day-to-day basis are not going to qualify for the premium loan products. If they do qualify for the premium loan products, we're definitely going to get them into the those premium loan products. Okay, that's just simple. But we got business credit cards. Those are easier and easier to get now, as long as you got the credit and you got an entity formed. Okay, and you got at least one or two credit cards, three ideally or more. They're under 40%, preferably 30% utilization. Personal cards, $5,000 or more, or 3,000. I mean, there's different criteria for. There's hundreds of different cards out there. Okay, and we got an automated platform that's going to place you with those cards automatically. So we're going to take care of you. Okay, we're going to match you with the right loan product for your situation. And no two business owners are the same. So one guy is going to get approved for this, another guy's going to, or a lady's going to get approved for that. I've never had two deals that are the same. I got a lot of deals that fall into a big pot, but that big pot is what is available for them. Okay. Now, I just got someone approved for $1.5 million accounts receivable line of credit. Okay. That is a good deal. That is a good deal. And their interest rates are low. Now, they're going to only get like what? Maybe 85% of the loan to value for their invoices or their accounts receivable, rather, right? These are projects or jobs that have been done. The invoices are out, and they're just waiting on the money. So they have this $1.5 million line of credit that they can draw off of, buy more supplies, complete more jobs, and invoice more clients, increasing their revenue, their monthly revenue. Okay, so that's an alternative business solution, and the interest rates are not horrible. They're I mean, especially you're only paying the interest on the amounts that you draw out. If you pay it back every 30 to 60 or 90 days, right? The sooner you pay it back, the less interest you pay. The longer you keep it, the more interest you pay. It's just common sense. All right. It's the basics. So so just get in the mindset that, hey, I can get you funding, but I don't, we can't guarantee you're going to get the funding that you want. We will try, obviously. Now, the other aspect of what's trending is debt. Okay. Now, the last few weeks, I've launched did a couple of lives on our new debt elimination product, right? It's not debt consolidation. It's not debt negotiation. Okay, we're not doing any of that. We just have a algorithm in our software that is going to calculate, and this is free. You can get your debt free estimate, down to the day, um, for free during our consultation. Okay, it costs you nothing for us to run your numbers. We're going to run your numbers. It's going to tell you at 2030 you're going to be debt free on September 9th, right? But it's going to also tell you when to pay those bills, the same amount that you're paying. Okay, but if you pay it 2 weeks before the interest occurs, then you're going to save that interest, right? This is good. This is good for business debt, business loans. I'm having a lot of people that we're getting business funding for, and then enrolling in the program and putting that new business loan into the program so they can pay it off early and not incur all the interest that they would normally pay. So it saves them a great deal of money. But it also includes business and personal credit cards, all personal debt and all business debt, mortgages, real estate, investment property, primary debt, your primary residence, commercial property, credit cards, any debt, car loans, commercial car vehicles, any debt can be put in here, and it's going to calculate, and it's going to say, hey, if you pay these bills at this time every month, right? And then it's going to take that money that you are saving from interest and suggest, like, when you get one thing paid off, say a credit card, now you can take that money and apply it to another and pay it off sooner. And every time you make those adjustments, it's going to recalculate and give you a debt-free date sooner than later. All right, but it's and you have access to this platform for life. Okay, it's you have access to it for life, and so any new debt you can roll into this program as you are growing. And then if you're become debt free, or you want to take that money and put it to high yield savings accounts or something else, invest it in something else, say real estate or a business or what have you, and then start generating and building your wealth. Okay, so that's what the platform does for you. Okay, but as someone out here in the financial sector, everybody has debt, right? They need more money and they have too much debt. So having multiple financial products to offer your clients is what's trending. You got to be the one stop, be the person that they come to, like, okay, this is a situation, right? I got a loan, I need a loan. What? Bam. Okay, I'm gonna help you get the loan. I'm gonna help you manage the loan, pay the loan off faster, save your interest rate, and get you some more money, and help you eliminate all your debt, build wealth, reinvest. All these different tools that we can use now with the technology, and we can really help people achieve their dreams. Okay, not just slam them into a loan product and walk away. Okay, that's what we're not doing anymore. Well, I mean, it happens, but my point is, we want to foster the relationship so we can keep them in these financial products sooner or later. Now, as far as becoming bankable and building business credit, we can still do that too. But here's uh, the real gist of the situation is, unless you pay someone a lot of money to do it for you, like a done for you system, these business owners are going to have to go through 6 to 12 months of diligently going through the process of getting trade lines, making purchases and payments, and managing all that on their own with some guidance from us. I mean, yeah, they're going to have some guidance, they're going to have coaches and all that, but they still have to do the work. Okay, doing if you're not if you're not going to do the work, if they're not going to do the work, then it's not going to get done. And quite frankly, we have more people that sign up, pay for it, and don't complete it than we do to have completed. All right, so I'm kind of shifting my focus towards just the funding and the debt management or debt elimination, and wealth building products. Okay, getting people into the right loan, but still offering them the services that go along with it. I want to be with them through the process so they can continue to grow their business, reinvest in a new business, or reinvest in an existing business, or get into the real estate investment. Interest rates are still high, but if you have the resources, it's a good time to get into investment property because there's so much of it out there. Okay, and more people are renting than buying. Okay, so these are the things that we're working on, and what I'm trying to convey that you have to broaden your knowledge about business funding and financial services and products in general. Okay, so you can help your clients achieve what they're trying to achieve. All right. So with that said, I am next week, most likely, or maybe end of this week, or probably next week. I'm launching a new platform for Business Funding Now affiliates. Okay. The free affiliate program is still available. You can get into it, but now you'll have an automated loan application platform and affiliate login. I know we've said this before. We got it. I'm switching platforms to make it more automated because as soon as you submit it, it's doing a soft pull, right? And you're getting loan matching and lender placement automatically, automatic document collection, all those things, right? As a free affiliate program, it's going to be 25% commission on whatever we make, straight across the board. But you don't have to do no work. Okay, you don't have to do any work. All right, you can just feed the machine, and you'll have your own unique loan application, so you can submit your deals and track your deals. Okay, I had to upgrade the software and the automations and a whole lot of things, but I think with this new platform is going to be really easy and user friendly, and you're going to get more funding deals. It includes credit cards, it includes the credit based programs, asset based programs, real estate programs, factoring programs, all startup business, SBA, all those programs are included. Okay, so that should be ready hopefully by the end of this week, early next week. All right. Now, or you can upgrade to the paid program. Now, the paid program is just a one-time payment. It's not ongoing monthly or anything like that. It's basically $450, $447. Now, what that going to get you is not only 30% commission on all your funding deals, but you're also going to get my business funding certification course, right? And that gives you the education you need for the 30 different loan products that are in the course, right? It's going to make you more rounded as an individual and understand the different funding. Now, the funding course, it covers, like I said, 30 different loan types, right? Like SBA 7A, 504, Express, things like that, import, export. It covers real estate. It covers, purchase order and all the factoring. When I say factoring, I mean invoice factoring, inventory, purchase order, accounts receivable. All those are classified as factoring type loan products. All right. And then you get like I said, like the credit pays, the credit cards, all that stuff. All the most popular loan products are in the course. But you're going to get the definition. You're going to get the case study. All right. You're going to get the qualification and requirements of all that. And the case studies show you what type of client this loan product could apply to. So that's why it's really valuable. Okay. You're also going to get my 5-question formula to pre-qualify any business for one of the loan types. I mean, I can ask 5 questions and boom, I know which loan product to put them in. Okay, based on those 5 questions. Okay. Now there's some follow-up questions that might be like if they don't qualify for anything and they have some real estate or they have some other assets, then there's some other funding products as well. And then there's always credit partners. Okay, that's like the last resort. Do you have anybody, your spouse or a loved one or family member that has good credit that will help you out? I don't like to use that, but it's available if we need to use it. Okay, so so you get all that with the course, but you also get enrolled as a debt elimination and wealth building agent, right? As well for that 447. Now, as an agent, when you enroll someone into the platform and they pay for it, you can make up to $1,500 per client. Okay, so this gives you all that. Now, as an affiliate, you just can get like $300 for each referral. That's it. But as a paid affiliate, you become your own agent and you submit your own deals and you make up to $1,500 per deal. On average, is anywhere from 1,000 to 1,500 is the commission per client for the debt management or debt elimination and wealth building product. Okay, so you're going to get both of those. You're going to get the funding course. You're going to get 30% commission, and you're going to get enrolled as an agent for the debt management. You have to be an agent to offer this product, but there's no test involved. You just have to pay. Costs $150, and then it's $50 a year to be an agent, and then you can run as many people. And quite frankly, everybody has debt, so you can be you can submit 5 or 10 people in a month, and you're making $15,000-$20,000 just off that, and they're all most likely going to need funding as well. So might as well get them a loan and then roll them into that, or roll them into that and then get them a loan. And if you're in the credit repair space, it's even better because you can enroll them into the debt elimination product, and then um, uh, uh, um, and then once they're enrolled, now they're a client, and now you circumvent the TSA law. So now you can start providing credit repair services as well. And you're helping them pay off their debt faster. You're helping them fix their credit, and we get them in type of funding that they can qualify for. Not just now, but in the future. Once you fix their credit, once they paid off some of their debt, and they look more attractive to lenders. You see what I'm saying? So now you're offering 3, 4 different products to one client. You got funding, you got debt, you got credit repair, you got the debt elimination and wealth building. All right. So, and then if you throw in the bankability, in there, or any other product that you may have. The point being is now you're managing or help this client managing their finances, right? Especially with the business owners, right? This is deep business owners, and let me help y'all out with the business owners. You know how many business owners? There are over 33 million businesses in the United States, and there are 1 to 2 million businesses started every year. Okay, this industry isn't going anywhere. Okay, there's plenty of business out there. You only need 10, 15, 20 a month, and you're a millionaire. That's what I'm literally. If you listen, if you want me to run some numbers, let me run some numbers. If you did 20 funding deals a month, say its average funding deal is $50,000, right? And then you get 10% commission. So that's $5,000. That's how much we make. And you get 25%. Okay. So that's $1,250, right? Off each deal. Times that, times 20. That's $25,000 a month. Okay. Now you take the same 20 times, say, 1,000, right? So that's another $20,000 for the debt elimination. So now you're up to $45,000. Okay. That's a month. All right. All right. Okay. And say you enroll them into your credit repair service, or you enroll them into, say, business credit. All right. Say it's the Become Bankable coaching program. All right. That costs $5,000. You get 25% of that. That's another $1,250. So you're looking at $1,250, right? Times 20, another 25,000. We're at 45 plus another 25. That's $70,000 a month that you get just off 20 business owners, right? One a day, Monday through Friday. That's what you can do, okay? In your local community. If you live in a metropolitan area, there's hundreds of thousands, right? If you're doing 20 a month, try 12 months, that's 240 a year, right? And you didn't even scratch the surface. I live in the Tampa Bay area. There's over 2 million small businesses in the Tampa Bay area. Okay? That's where I'm focused at. That's where I market at. That's where I'm getting my clients, is in the Tampa Bay area. All right? And I can get 10 or 20 of them a month to apply for a loan, to get out of debt. I don't do credit repair, but that's here nor there. My point is there's plenty of business out there for everybody. Okay. And with the new affiliate program, with our new loan application process, everything's fully automated and you don't have to do any of the work. We do all the work. We do all the loan processing, document collection, everything. We even collect the fees if there's fees, everything. All you got to do is feed the machine. Just feed the machine. That's all you got to do. Okay. That's all you got to do. Okay. Listen, like, follow, share, do those things. But better yet, go to businessfundingnow.com and sign up as an affiliate. Okay? Sign up as an affiliate. If you want to start free and then upgrade to the paid, let's do that. Okay? Get a few funding deals in. Right? Those numbers I just ran are at the 25%. Right? If I ran them at 30%, it's just increased it. And it's a small investment for you to be able to offer all of that. All right, $450, and you can get. And you know what? For the $450, I even build you a landing page so it's on your brand. Do it on your brand, and I'll customize the application link for your brand. How about that? All right. Listen, I'm just saying. I know I'm declaring and decreeing that 2025 is my best year ever. Why don't you join me? Let's do this in 2025. My name is Jeremiah Davis. I'm the funding coach. Peace.